Business, wealth, and strategy, where smart entrepreneurs build lasting wealth. Today, we're diving into a topic that's been shaping financial headlines, confusing the unprepared, and exciting investors for over a decade now: Bitcoin. Whether you're already holding crypto or just beginning to explore the idea, this episode will give you a comprehensive understanding of Bitcoin's journey from digital rebel to legal recognition and why it matters for your long-term wealth strategy. So grab a coffee, notebook, your walking shoes if you're listening on the go, because we're going to go deep into the world's most recognized cryptocurrency. Let's go back to 2009. The world was just beginning to recover from the devastating effects of the 2008 financial crisis. It was during this time that an anonymous figure or group named Satoshi Nakamoto released a white paper titled Bitcoin, a peer-to-peer electronic cash system. Now, this wasn't just another tech experiment. It was a response to systemic failure. The white paper laid out a vision for decentralized digital currency, a system where people could send money directly to one another without needing a bank or government to verify or control the transaction. Bitcoin was the first of its kind. It used blockchain technology to create a permanent, unchangeable record of every transaction. And it wasn't just about creating digital money. It was about reclaiming financial independence. In the beginning, Bitcoin was more of an experiment. Tech enthusiasts mined it on home computers. And back then, it had almost no value. Until one day in 2010, a developer bought 2 pizzas for 10,000 Bitcoin. That's right, 2 pizzas would be worth hundreds of millions today. It's now known as Bitcoin Pizza Day and is celebrated annually by the crypto community. But most of the financial world dismissed it, calling it a fad, a scam, or just a clever gimmick. No one imagined it would grow into a $1 trillion plus asset class, or that major banks, investment firms, and even governments would one day be forced to take it seriously. Let's talk about what makes Bitcoin so unique from an investment point of view. Scarcity. Unlike traditional currencies, where governments can print more money whenever they choose, Bitcoin is limited. The code behind Bitcoin states there will only ever be 21 million coins in existence. Once they're all mined, that's it. This creates a type of digital scarcity, one that many compare to gold. It's deflationary by design, which means the opposite of most fiat currencies that lose value over time due to inflation. Now, Bitcoin mining is how new Bitcoins are created. Bitcoin transactions are validated and recorded by miners. That's computers solving complex math problems to keep the blockchain secure. As a reward, they earn newly minted Bitcoin. But this is the interesting part. Every 4 years, the reward for mining is cut in half. This is known as a halving event. When Bitcoin started, miners earned 50 Bitcoin per block. As of April 2024, they earn just 3.125 Bitcoin. This halving slows the generation of new Bitcoin, tightening supply even further. Historically, this has led to price surges about 12 to 18 months after each halving, as demand outweighs the new supply. So yes, Bitcoin's growth isn't random, it's engineered. In 1921, El Salvador made headlines by becoming the first country to accept Bitcoin as legal tender. That means citizens can pay taxes and shop using Bitcoin. It was controversial, but it sent a message. Bitcoin isn't just a tech toy, it's a real currency in some parts of the world. Other countries are watching, especially those with unstable currencies. And even if they don't adopt Bitcoin directly, many are working on central bank digital currencies, CBDCs, in response to the crypto movement. As Bitcoin grew in popularity and value, regulators couldn't ignore it any longer. For years, the crypto space was a bit of a wild west. New coins launched daily, exchanges operated without oversight, and scams were unfortunately common. But over the past few years, we've seen a significant shift, especially in the United States, where regulatory bodies like the Securities and Exchange Commission, that's the SEC, and the Commodity Futures Trading Commission, CFTC, have stepped in. One of the first major tasks was to figure out what Bitcoin actually is. Is it a currency, a commodity, a security? The general consensus now is that Bitcoin is treated as a commodity, similar to gold or oil, which places it under the regulatory eye of the CFTC. This is important because it gives clarity to investors and opens up pathways for more traditional financial products to be built around it, like futures and EFTs. Meanwhile, the SEC is focused on regulating crypto exchanges and other tokens that qualify as securities under US law. They're particularly concerned with investor protection, anti-money laundering compliance, and cracking down on fraudulent ICOs. The US is also working on broader legislation through Congress that would create a dedicated framework for digital assets. This includes stablecoin regulation, tax reporting rules, custody guidelines for banks and financial institutions, and even potential central bank digital currency frameworks. All of this means one thing: crypto is becoming part of the financial system, not an outsider to it. Some in the crypto community see regulation as a threat to decentralization. But from an investor's perspective, regulation means clarity, stability, and greater participation. It reduces the risk of rug pulls and shady exchanges and helps institutional investors feel safe entering the market. And one of the biggest milestones in Bitcoin's evolution, the approval and launch of Bitcoin ETFs, that's short for exchange traded funds. An ETF is an investment product that tracks the price of an asset, in this case Bitcoin, and allows investors to buy shares of that asset through their regular brokerage account. It's the same system people use to invest in the S&P 500 or gold ETFs. So why is this such a big deal? Well, before ETFs, buying Bitcoin involved setting up a wallet, managing private keys, securing your crypto from hacks, and understanding how exchange works. That's a steep learning curve for most traditional investors. With an ETF, it becomes as simple as logging into your investment account, typing in the ETF ticker like IBIT for BlackRock's iShares Bitcoin Trust and clicking buy. You don't hold Bitcoin yourself, but you're still exposed to its price movement. This bridges the gap between crypto and Wall Street. It means pensions, hedge funds, and retirement accounts can now invest in Bitcoin legally and easily. Financial advisors can include Bitcoin in diversified portfolios. And most importantly, it brings liquidity, stability, and legitimacy to the space. Some of the major ETFs that have launched recently include BlackRock's iShares Bitcoin Trust, Fidelity's Wise Origin Bitcoin Fund, and several others that are pending or are about to go live. These ETFs often hold billions of dollars in assets, and they're part of what's pushing Bitcoin closer to mainstream adoption. There's even talk now about Ethereum ETFs and potential ETFs tied to a basket of crypto assets. If this trend continues, we may see a future where digital assets are just a standard part of every diversified investment strategy. So while ETFs don't replace the importance of owning crypto directly for some, they do make Bitcoin accessible to a far wider audience than ever before. And that opens the door for a whole new wave of adoption. Now comes the big question. Should you invest in Bitcoin? Well, like any asset, it has risks and rewards. It's still volatile. Prices can swing widely. But as part of a diversified long-term investment strategy, Bitcoin can play a very smart role, especially if you understand cycles and use techniques like PCA, which is pound cost averaging. That's exactly what we cover in Zero to Millionaire membership. Not just crypto, but shares, commodities, property portfolios, and how to build a complete investment strategy. If you found this episode valuable, make sure to subscribe and share it with someone who's been curious about crypto but doesn't know where to start. And if you're serious about taking control of your finances and building real wealth, check out my Zero to Millionaire membership. Inside, I walk you through the exact investment strategies I use, including crypto shares and more, to grow and protect wealth. You get monthly updates, tools, coaching, and access to a growing community of smart entrepreneurs just like you. You'll find Zero to Million membership at https://courses.karennewtoninternational.com. So thanks for tuning in, and I'll see you in the next episode. This is Business and Wealth Strategies, where smart entrepreneurs build lasting wealth. Disclaimer. The information shared in this podcast is for educational and informational purpose only. It is not intended as financial, investment, legal, or tax advice and should not be construed as such. I am not a licensed financial advisor, and the strategies discussed are based on my personal experience and my general market knowledge. As always, do your own research and consider your individual financial goals, risk tolerance, and personal circumstances before making any investment decisions. I strongly recommend that you consult with a qualified financial advisor or licensed professional before acting on any information received in this podcast. Investing involves risk, and past performance is not indicative of future results. By listening to this podcast, you agree that the host and associated entities are not responsible for any losses or damages arising from your use of this coin.